Hello traders, Gary Wagner here. Just before 12 noon in Honolulu, 6 o'clock in New York. It is Monday, 9th day of October 2017, and this is the Daily Report for Gold and Silver. The war of words continued over the weekend, ramping up statements made on both parts, both by President Trump as well as the leader of North Korea. Gold absolutely affected as we moved into a risk-off environment, and this also contains follow-through from Friday's nice upside surge. Gold closed up about $11.50 at $12.8640. Silver up about 20 cents at $16.99, with the dollar index down fractionally at 93.50. Of course, we did send out a special trade alert this morning. We will go through that in detail as we pull up our first chart. Today, gold traders made good on Friday's upside move with some follow-through buying, taking most active December gold futures up $11.50 to close at $12.8640. We did issue a recommendation to initiate long positions in gold this morning. Traders taking that call got in at about $12.87. My sense is that we have had not only a dynamic move today, but a move above a critical potential resistance level, making our new target 1303. Let me explain a little bit further. First of all, on Friday, if you recall, we talked about the fact that we had to absolutely update our current Elliott wave count because of the fact that this retracement traded well beyond the rule of Elliott wave that simply states that wave 4 cannot go into the price target of wave 1, which we had labeled as a move from 1200 to 1280. Clearly, the end of last week put us into that territory and thereby negated that as a potential count. Now, the only alternative that made some real sense was a simplified look at it, in which we looked at this long rally as a wave 1 and the subsequent correction as our wave 2, which I believe has absolutely ended at this point. Furthermore, today's action moved us past a 50% retracement of the entire rally, which sits at 1284 with the market closing at 1286.40. And that puts our next target at $1,300 per ounce, the 38% retracement of the rally. And traders, in terms of our stop placement, we placed our stop below the low that was achieved on Friday, which is also the lowest low that this correction had taken gold prices to, and that sits below 1266, a 61.8% retracement. So our stop is below 1263. And traders, another factor present in the market really tells me that this could be the beginning of an extended rally in the market, moving the rally off of these recent lows and not only going to 1300, but I believe the potential is to go back to the most recent highs of the year. When we look at today's activity under the Kitco Gold Index, in other words, breaking down what is dollar weakness and what is buying, we can see that in spot or physical gold, which closed up $7.40, only $1 of that move, of today's move, is really predicated on a weaker US dollar, with the majority of today's gain, $6.40, being directly attributable to buyers within the market. Therefore, my recommendation is to maintain our current long position in gold as well as our current stop. And traders, lastly, as I spoke about on Friday, I do want to spend a couple of moments and go through my revised upside target with our new Elliott wave count, in that if we truly saw this as only a wave 1, and then of course we had our 61.8% correction taking us to wave 2 at 1262, then wave 3, which cannot be the smallest of any of the impulse waves, and that would be waves 1, waves 3, and waves 5, at minimum, according to Elliott wave theory, would take us to about 1420, and that's something that we covered very briefly on Friday. But what I also find extremely interesting is when we look at where the 61% extension is we're running our first Elliott wave count from this rally, and then we're beginning our extension down here. 61.8% extension is precisely equal to the top already achieved this year, which tells me that this is in sync with our current thinking. Traders, absolutely no doubt, the war of words is continuing and it's moving to another level, with Trump stating last week that the only thing North Korea will listen to is basically military action, in the way that I interpret one of his tweets. Of course, North Korea responded in spades, and we continue to ratchet up the words, but these words are now threatening on both sides the use of military action, and that is something that is truly troublesome. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.